Hello. I hope you had a good Thanksgiving. Well, winter is here. It's December. I hope everyone is staying warm. We have some cooling in the economy to go over, and some interesting bifurcations out there are occurring too. So let's jump right in. For November, the S&P 500 pretty flat. Looking at different sectors, tech and consumer discretionary were definitely the laggards there. These sectors are probably where we've seen a lot of volatility so far, especially in the tech sector. That's been the theme for a couple of years. Internationally, developing world was pretty flat as well. So lots of flatness in the stock market for November. Not to say that we didn't see volatility, but overall returns were fairly flat in November. Same thing on the bond side as well. Not a whole lot of movement there for the month of November, and not surprisingly, investors were certainly digesting a lack of data out there from the government shutdown. Record 43 days, not a great record to break, of course, finally ending on November 12th. But of course, that meant that data that's normally provided by the government, is definitely backlogged. Job reports, inflation data, GDP, we just haven't really seen, unfortunately, much of that for November. So not a whole lot of movement there in the market as a result. Switching over to the Federal Reserve, did have a rate cut, of course, right at the end of October. Seems to be some disagreement over what to do going forward, whether or not we're going to see another rate cut here for December. Again, they're looking at the data. We have some data not so good. Auto loans, mortgage, credit card balances have increased this year. So obviously we don't like to see that increase in debt. Job growth below expectations for the year. Manufacturing also slowing a bit as well too. So on that front, we might assume that they would cut rates, continue to cut rates. However, on the other side, we are seeing that wage growth is up about 4% year over year, and record spending for Black Friday and Cyber Monday up 9% and 7% respectively this year versus last year. So what does this mean for investments and households? We're optimistic about economic growth into 2026. Although at a subdued rate. I don't certainly believe that we're going to see the phenomenal stock market returns next year that we certainly saw this year. A lot of that data certainly supports that. We'll take it though. We'll take the good returns that we've had this year. Obviously, averages are made up of a series of highs and lows. Thinking back to 2022, definitely a low year. Here, 2025, definitely a high year. Average those together, and that's where you see long-term market returns certainly come in. Pricing pressures are going to persist next year. We don't see necessarily any dramatic relief to that. And while the rate of inflation has come down, we haven't seen a lot of price reductions out there. If you're going to the grocery store, you've probably seen that egg prices have improved, but not beef. And don't get me started about what auto prices look like out there as well. Probably won't see much in the way of pricing declines as a result of what we're seeing today. So what does that mean for you personally? Just like we're getting more defensive in our investment portfolios for you, I recommend getting maybe a little bit more defensive in your household budgeting, having a little bit more cash potentially, especially if we do see some market volatility. We'd recommend 3 to 6 months worth of expenses anyway, held in cash at any given time. That's a Dave Ramsey thing that I like to quote. I love Dave Ramsey. I actually just finished teaching his course again. Taught it a couple of times now. Really enjoy it. Actually brainstorming about maybe doing something like that in this format. If you think that might be valuable to you or someone that you know, let me know, because I am open to ideas and maybe doing something like that into the future. Regardless, I hope you guys have a great holiday season. I'll be working on my end of year letter here pretty soon, and eventually starting my Christmas shopping, so don't feel bad if you haven't done that yet, and hoping that I've been good enough to not get some coal this year. That's all for now. Take care, and we'll see you soon. Thank you.